Digital Roadshow Quarter 1 2021 Performance Review. This section will run about 45 minutes, including Q&A. Company will start the section by 30 minutes presentation, followed by 15-minute Q&A. And during Q&A, investor may leave your question in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the question to the company directly. So may I now invite TMB THANACHART Bank Public Company Limited to start the presentation, please. Thank you very much.
Thank you ค่ะ and good afternoon everyone ค่ะ This is the first time for TTB to join SET Digital Roadshow. It's an honor นะคะ Normally we always join SET Opportunity Days and we think that it's a good that we can reach out to more investors through this digital roadshow, and I hope that we could join SET Digital Roadshow on a regular basis going forward. So I believe that the first quarter result already released for quite some time. So I will just take a short brief, walk you through on the key pages that I believe that it would be a key highlight for the first quarter result. And then I will leave some time for you for Q&A sessions. Today for TTB, we have our management, one more person, Khun Narit Arakkunwong. He is a head of strategy, and myself, Dararat, head of investor relations. So maybe we start with the very first page นะคะ for the key summary for the first quarter result. So I think overall for the directions for this year and including this quarter as well, we would like to focus more on the qualities for TTB Bank. During this difficult time, we believe that focus on the quality would be the directions for TTB Bank. So with that, you can see the loan for the first quarter decline because of these directions. And of course, for TTB Bank, we have quite a unique position because we just finished the closing on the merger with T-Bank. So with that, we have the opportunity to do synergies. We have three key areas. One of that is the balance sheet optimizations. And with that, for the first quarter result, we believe that we also get the benefits on that part as well. So you can see the first quarter result, the net interest margins stand around 3% because of the balance sheet optimizations that lower our cost of deposits quite significantly. We also have that pages on the following page that I could share you later. And when we touch upon other things, of course, when we're talking about year 2021, for TTB Bank, one of the key area would be EBT. We expect to be complete in the beginning of July this year. So we believe that things are quite smooth. It should be on time on the early of July. And when we complete with the EBT, we believe that the another key area on the synergy is especially on the revenue synergy could be deployed because even though we closing the merger transactions in year 2019, again, things on the legal, on the law, on the DPDA still also limits the bank to cross-selling with the customer data. So if we could, once we complete the EBT, we believe that it could unlock the opportunities on the cost revenue synergies. For asset quality, you can see that we end the first quarter result still in line with the expectations that we gave the guidance at the beginning of this year. Maybe flip on to the next slide. So I believe this area would be the key area that investors remain concerned on the debt forbearance. Currently, for TTB Banks, the current portfolio for the debt forbearance represent around 14%. 1% came from the first phase of debt relief program that we grant in year 2020. For 13% that represent the customers that exit the first debt relief program and come back asking for more additional help that ranging for 7 schemes. So maybe flip into the next slide on the 7 scheme package that we are offerings to the customers. When the customer come back and asking for the additional help, we said that it's ranging from the small support to high support, ranging from SC1 to SC7, based on the request that customer believe that they would like to seek for the assistance from the banks. If they're asking for more help, then the bank would put more the ECL on that particular customer who asking for SC4, SC5 through SC7. We even shift the bucket if they used to be the customer in stage 1 pre-COVID-19, but because they're asking for more additional help, then the ECL model of TTB Bank would capture the behavior of customer. Then the PD will shift, the bucket will shift, then TTB Bank would put more ECL to represent the true risk of that particular customers. So we believe that the current moment of our ECL model is sufficient. On top of that, TTB Bank also put more management overlay, and we would like with this overall on the ECL model that captures the behavior of customer who asking for the additional help on debt forbearance. We believe that currently the ECL of TTB Bank is sufficient. On the next slide. So that represents the breakdown on the debt forbearance. Currently, the commercial loan represent around 10%. So 19% of commercial loans and 10% of retail loan represents the status of debt relief program. On the next slide. For this slide, we would like to show investors that you can see from here, comparing to the first initial phase when the government announced the full lockdown in year 2020, we received quite a huge amount of requests, incoming requests, compared to the second phase, second wave, and the third wave that we currently facing. The trend is much more lower, and we see the trend quite stable for the third wave compared to the second wave, and I could say that it's downward trends when you compare with the full lockdown in the previous year. So I think things on the asset quality and debt forbearance remain manageable. On top of that, with the support from the governments and BOT on the next slides, on the asset warehousing and also BOT special loan, I believe that is quite a win-win for a bank and also for the customer as well. So overall, we believe that the asset quality and the debt forbearance would help the bank and customers survive this crisis on the COVID-19. Next slide on the target and deliverable in Q1. I think overall, I think everything's remained in line with what we discussed at the beginning of this year. Maybe I highlight a bit on the cost to CYI ratio. The first quarter result end at 47% for this year. We expect to have the integration expense incurred for this year. But overall, for the longer term, we believe that the cost base could lower down to around 40% for the next 5 years. That is kind of like the overall plans. Maybe I pause it here and maybe just open for a Q&A sessions. Yeah. While we waiting for okay, Okay, I received one question from investors. He asking about the recovery. So what sectors are seeing the strongest recovery in terms of loan demands? Overall, I would say demand remains soft for bank across all the segments. But of course, when you're talking about the strongest recovery, I would say on the corporate side, as you can see that they have much more stronger when you compare with the SME. And for retail, again, this segment for specific product, I believe that if you target for higher and above middle income segment, they look fine. But if you're talking about middle income, they try to wait for to spend in terms of slow down on loan demands, on if they decide that they would like to have the mortgages, they would like to have the commitment on the credit line. Currently at the moment for the middle income and under middle income, I believe that the demand is still soft. The next questions from Angus as well. Could you outline your strategy on digital and mobile banking? Can I pass these questions to Kunarit, please?
Sure ครับดา and thank you for the question นะครับ I guess maybe we can go to the okay maybe I just highlight what are the thinking นะครับ if we look at the digital as part of our core strategy, I would say that I think TMB in the past has been pushing this adoption of the digital channel all along. And I guess if we look in terms of the contribution of the digital channel in terms of the percentage of transaction, service transaction going through the digital channel versus the traditional branch channel, I think you see that already today 99% of such transaction is happening in the digital platform นะครับ so I think we have done a relatively good job in terms of migrating low value transactions from a high cost to serve channel, which is the branch, to the low cost to serve channel. However, when we look at the broader engagement through the digital channel, we believe that there is still room for improvement when it comes to sales related transaction. I would say that today still a small portion of sales happening through the digital channel, and I think partly is driven by the consumer behavior in the past, that when you want to make purchase decision, I think Thai consumer in the past, especially when it comes to big ticket like buying mutual fund or buying protection policies, I think people tend to want to interact with human being, sales staff to seek their advice before committing to big ticket transaction. However, I think given all the changes happening in the digital banking landscape in Thailand over the past couple of years, triggered by prompt pay, if we recall 3 or 4 years ago, I would say that I think the behavior of the consumer had somewhat shifted. Also, the trust of the consumer in doing things on the digital platform has shifted, and I think we TTB Bank is in the process of going through a full revamp of our mobile banking platform. I think starting since the last couple months, if you are the user of our mobile banking platform, you will already notice that I think we gradually change the look and feel of our mobile banking platform. And I think next month we will do a mini revamp to incorporate the auto lending related function in our mobile banking platform to accommodate THANACHART bank customer. So that's kind of a small revamp to accommodate the integration with THANACHART. And I think the major milestone would be the end of the year which we plan to launch a complete new version of the mobile banking application, which we would allow, we would hope that would deliver a totally new experience to our customers. I think a few highlights that we try to deliver. Right? I think number one, I think in terms of the hygiene aspect, seamless experience, stability, convenience in terms of the frequently used function. I think these are the hygiene things that we will take this opportunity to uplift what we have to match or hopefully even better than some of the leading digital banking platform at the moment. Also, I think we would hope to deliver what we call segment of one, essentially a personalized offer or message to each individual customer. I think we have talked a lot about customer-centric solution, and I think trying to deliver that in the offline world is quite challenging, given that at the end of the day, we need to rely on the capability and capacity of the staff. But I think trying to automate this and leverage data analytics to deliver this in the digital world, I think is much more scalable, and that's what we try to do. And the last component is, I think, what I said earlier in terms of the sales transaction happening in the digital platform. From today's point of view, is still quite limited, partly driven by how we structure the current mobile banking platform. But with the full revamp happening toward the end of the year, we hope that I think it would be much simpler, much more convenient for the customer to do some of this purchase transaction through the mobile platform. And I guess in the worst case, in some of the big ticket transaction, I think what we try to build in is through this online to offline journey, whereby the exploration, the initial information could be shared to the customer through the mobile banking, and then the sale closing at the end could also be performed by our outbound sale, our branch staff. So that is kind of in line with how Thai consumer behave. That's kind of the high level view of what we plan to accomplish in terms of digital banking strategy for this year. I think in a nutshell, a lot is happening currently at TTB to try to revamp what we currently offer to the customer through the digital platform. Da ครับ you on mute.
Sorry ค่ะ thank you ค่ะ คุณนริศ I received one more questions ค่ะ from คุณกุลรัตน์นะคะ Could you please share the progress on the asset warehousing? How many % of total loan requests to enter this projects? So I believe if you look at this page นะคะ page number 8, for TTB Bank, I think it's fairly small when you see the potential eligible exposures for asset warehousing. So overall, it could go up to around 10 million, but currently the incoming requests to enter to the asset warehousing, we receive quite a small amount, because when you look at our TMB Bank, I could say that the tourism sectors who really eligible for asset warehousing for a TTB Bank, we have quite small amount when you compare with the total loan size of TTB. So the current moment that we receive the incoming request from the customer who asking for the asset warehousing, it's like kind of below those 10 billion. So when you look at the number of 1.4 trillion, it's less than 1%. So that's kind of like give you the big pictures. Maybe Kunarit, if you would like to highlight anything on this as well.
I guess similar to what Kunda touched on earlier นะครับ in terms of the relief request through asset warehousing or any other program that we currently have, I think compared to the initial wave of COVID outbreak last year, I think the traffic, the volume of requests that we have seen coming in through our call center to the website, I think has been much less than what we saw last year. So I guess I hope that's also a good sign that I think seem like the business and the consumer are holding up quite well up to this point. And I guess we hope that I think with the ongoing vaccine rollout happening nationwide, I think that would also help speed up in terms of the economic recovery overall.
Thank you ค่ะคุณนริศ I received one more questions from คุณ Angus ค่ะ Is fee income becoming increasingly important and where would you see the richest seam from this going forward? So maybe คุณนริศ can touch later but maybe I highlight it first. I believe going forward for banking sectors, fee income would be the revenue engines for a banking sector that's quite important for us because first of all, fee income would not digest the risk weight assets. So this is first thing first. And I believe for TTB Bank, as I mentioned earlier, we have quite a unique positions. We just do the mergers with the THANACHART Bank. So I think one of the key area would be the revenue synergies that we not yet fully capitalize that. And we believe after the EBT, we could capture that by using the customer data. Because if you follow TTB Bank, one of the key areas is that the overlapping from the both bank, the customers, we have like 10% on overlapping customers for TMB and T-Bank. And that could uplift the revenue synergies on fee income. Because when you're talking about T-Bank, on fee to earning asset for T-Bank, they're quite low because when they're gathering the deposit from customers, they would not turn customer to use the protections and mutual fund product because they would like to use that funding for the higher purchase product. For TMB Bank, quite opposite. We have quite a good fee income to earning asset. It could be, it used to be high peak at 1.7% for fee to earning asset. So I believe that once we completely mergers after EBT, that could uplift. And of course, fee income would be one of the important area for banking sectors going forward. Yeah.
ครับ maybe I add on top of what คุณ Dararat just said. I think one of the key strategic direction that we try to pursue after the merger is really try to capture main bank relationship. I think if we look back in the past, both THANACHART and TMB Bank tend to be the product champion in their respective domain. THANACHART Bank is number one player in auto lending. TMB is well known for deposit products like all free, no fix. And I think even though we were the medium-sized bank back then, we were able to have the cost of funds similar to other large banks. I think that's kind of demonstrate the strength of our deposit product. And also, I think through the open architecture strategy really early on in the industry, we also managed to do quite well in terms of cross-selling the deposit customer into the wealth management product. But at the end of the day, I think each bank have their own respective niche that they focus on. And but again, when we look at this from the customer lens, most of customer would have a broad range of needs, right? But I guess in the past, as medium-sized bank, both banks did not really pursue a strategy to really capture the main bank relationship. However, after the merger, I would say that we have somewhat overcome the size handicap when it comes to investment required to capture the main bank relationship. Such as, for example, building a competitive mobile banking platform, for example, that I think in the past it may require huge investment and it may not make economic sense for us to really try to go head on with the industry leaders. But I guess after the merger, investment like this make much more sense, given that we have almost double the number of customers in our portfolio. Also, I think through the complementary product strength of both banks, I think what we have on shelf, both from the deposit or wealth management side as well as the lending side, is much more competitive than before compared to what other large banks offer in the market. And I think through this rationale of what the merger brings, we are much more comfortable of trying to capture the main bank relationship of the 10 million customers that we have in our portfolio. And I think the consequence of deepening the relationship of the customer that we currently have, that should be able to translate into a higher fee income that we generate. Because I think most of the time when it comes to deepening the relationship, it would also imply higher product holding per customer, more revenue generate per customer. And in many cases, I think the revenue that we generate from deepening the relationship would be related to fee income.
Thank you, Kunarit. We're waiting for more questions from investors. So if you would like to ask any questions, you could raise your hands so we could allow you to speak and discuss with us directly, or you can put it in the chat box.
Next question in your chat box.
Okay. More questions from Mr. Angus. How much of an impact would the opening of the economies to tourists have on the bank business? I guess unavoidable. I believe, even though, as I mentioned earlier, that for TTB Bank, the exposures on tourism sectors for our loan portfolio is quite marginal, very small, less than 1%. However, when you're talking about the indirect impact for the tourism to Thailand, of course, it's quite huge. So I think if you're talking about indirect impact, that would boost the domestic consumptions, the retail segment. When you're talking about the loan demand, if the economic recovery is coming back, that could also help. So I think it's difficult if I would say in terms of figures, how much would that impact to our banking business. But I think it would be also help in terms of motivates, in terms of domestic consumption, especially when you look at the portfolio of TTB Bank. One of the big portions would be on the retail side, especially on the higher purchase and mortgages, which of course retail based.
Do you have any question? Okay, if there are no questions, the session has come the end. Thank you very much, investors and corporate, for joining the conference. If you do need further details, please feel free to drop us an email. Have a good day. Goodbye. Thank you very much.